NBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh, with me Sonia Shenoy. Well, it was yet another day when the bulls and bears fought it out and the bulls didn't quite make it. What didn't go in favor of the bulls and maybe a little bit in favor of the bears were the commodity stocks. They just went from weakness to weakness in global markets, especially commodities themselves. And you saw that impact on the Hindalcos and the Sterlites and the Tata Steels and commodities in general, taking the markets lower.
Yes, in fact, it was a down day. You could see it in the market breadth as well, Lata. Quite weak today. But at the end of it all, our markets at least outperformed in a sense, because Asia, Europe, all of them were down 1.5% while we shut for trade. But here are all the top headlines that we're tracking on markets today. The slugfest between the bulls and the bears continues as Dalal Street witnesses yet another volatile session. The Nifty ended with a loss of 22 points today. The Sensex was down about 80 points.
The World Bank cut its global growth outlook, triggering a crash in the commodity markets. Copper prices fall to the lowest level since mid-2009. Crude trades at fresh 6-year lows. Commodity giants like Vedanta, BHP and Rio Tinto have also stumbled. Sterlite and Hindalco in India fall 8%.
And HUL goes home as the biggest gainer today, yet again up 4%, hitting a fresh high. In fact, the entire FMCG space zooms, with stocks like Asian Paints, Dabur, Marico all hitting new highs today.
And in macro data today, the wholesale price inflation rose by a meager 0.1%, lower than expected. Most food products fell month on month, and core inflation fell to 1.3%, its lowest level in 60 months. Right, those were the headlines, and here are the experts that we have lined up on the show for you. Gautam Chowcharya of UBS will join in to tell us how he is reading the current markets setup. Sudarshan Sugani will join in as always for the technicals, and we will also get you the managements of some of the companies that announced their earnings today, like Yes Bank.
All right, and straight to the day's trading action then. A decent open, then a sharp fall, followed by a late recovery. Looks like the volatility is here to stay as Dalal Street saw some wild swings once again. Anuj Singhal is here with the day's market wrap. Anuj.
Indeed, the slugfest continues. Looks like today was round 4 and maybe another 8 rounds to go now in this slugfest. But really, no one is giving up right now, either the bulls or the bears. The battle for 8,200 or 8,400 is something that will be decided at some point, maybe during the January series. But right now, the market is having really volatile days in this band. And what's happening is that traders are sensing something, and that's why money is clearly moving towards defensives, quality stocks, and high beta is taking a bit of a knock for last couple of days. In fact, let's talk about some stocks then in today's trade. Take a look at the top Nifty gainers today. Hindustan Unilever really is now added 40,000 crore in market cap this month alone. It's been a spectacular run for Lever, and today it went to 935 after a bit of profit booking that it saw yesterday. Infosys was up 2%, and Asian Paints as well, making a new lifetime high, up about 1%. On the other hand, take a look at the opposite end of the spectrum. The metal stocks, they were all down quite a bit, in line with what happened with metals globally. So, Sterlite, Hindalco, Tata Steel, they were all down anywhere between 4 to 8%. Some of the falls were really scary if you were a bull. In terms of some other prominent Nifty losers, ITC fell below its 200-day moving average today. That is the proposed ban on sale of loose cigarettes. Also, there's some talk of MSCI weight reduction. That didn't help the stock. ICICI has been weak for some time now, and Reliance as well was down about 1%. On the gaining side, BHEL, Ultratech, Maruti, big gains. In fact, Maruti made a new lifetime high. Ultratech, it's been a dream run for cement stocks, so that also looked quite good in trade. In the mid-cap side, again, high beta took quite a bit of knock. That's the theme which is continuing from yesterday. So JP Associates, Unitech, India Bulls Real Estate. The cuts are not deep, but are telling you that there's a bit of warning signs in some of these mid caps. On the other side, of course, you had stocks like Subex, ITI, Dabur, Marico. All these stocks gained ground. So the bottom line is that as of now, the Nifty is firmly in a no trade zone, but there are some opportunities in the mid caps, and clearly there's a bit of shift towards quality stocks.
Oh, thanks a lot for that, Anuj. So quite clearly, actually, the long and the short of the market today was the weakness in the commodity stocks and, of course, in a bit of high beta. It's a tribute that in spite of the commodity stocks like Sesa, Hindalco, Tata Steel, Hindustan Zinc, at least the first three, falling by 8%, and these are weighty stocks. In spite of it, the index has practically not moved. I mean, 20 points is really nothing. That indicates the amount of strength in the other stocks. I mean, you saw IT coming and playing out. To some extent, FMCG also, although, you know, ITC was a little under the weather. As a whole, ITC was continuing to, as a whole, FMCG was continuing to play it. And as were all the other sectors, autos. We didn't see any seminal weakness in any of them. So the weakness in metals, which was largely global, was very nicely countered by a whole host of other stocks, quite clearly indicating that at the moment the honours are even between the bulls and the bears, as also the market is very firmly in that zone between 8,200 and 8,400, trading bang right in the middle. We are looking for direction and perhaps some big event, maybe some outstanding result or pathetically poor result will move the needle, not anytime soon.
All right, time now for some market opinion then. Gautam Chalcharia of UBS says that it will be tough for the market to match the returns of 2014 this year, but he continues to maintain a target of 9,600 on the Nifty by the end of this year. Take a look.
It will be difficult to repeat 2014 in terms of returns. So I won't recommend investors to hope for that kind of returns in this year itself. But it's still looking at reasonable returns this year. So our Nifty target for the year end still remains 9,600, which does indicate 16-17% returns from current levels. Investors should still look at equities as offering good returns. And this will be driven largely by earnings also, not just by valuation re-rating or expectations running high. Multiples are still reasonable, and the early stage of recovery or even a slight recovery will be enough in our view to drive double-digit earnings growth. And that's what will drive this return for investors this year. So in the short term, there could be FY15, there could be downgrades. FY16, the estimates which I saw was around 17% odd on a bottom-up basis. From a top-down strategy perspective, I'm penciling in a 15% earnings growth for next year.
All right. All that is, of course, for next year. The here and the now earnings season, no one is willing to bet much. But on that note, let's get to more news of the day, the futures and options space. Let's cut across to Nigel D'Souza for a wrap of what happened.
Well, one thing's clear from the derivative market, that volatility is back in the system, and that was perfectly replicated in the India VIX. The Nifty ended down by 20 points, but take a look at the VIX. It was up close to around 5% odd. The 8,400 call as well as the 8,500 call, both of them had their premiums going higher on the day that, in fact, the Nifty ended lower. That's a bit of a rarity. So what that's telling you is that the IVs are going higher, and in fact some traders are going out there, they're buying some out of the money call options, while others, they're using this as a perfect opportunity to go there and in fact ride those strikes. The premium was higher, so you're getting more amount of money. Remember, in fact, the 8,400 to around the 8,500, that's the level where the Nifty should see some selling pressure. The 8,200 foot as well as the 8,150 foot, on both those two strikes, we did see unwinding pressure in today's session. But the 8,000 level, that one should hold out because that's where the highest open interest lies. And in fact, in today's trade as well, we did see a fair bit of activity at around that 7,900 foot as well as the 8,000 foot. It definitely wasn't the day for metal stocks because take a look at Hindalco as well as Sterlite. Both of them ended down by more than 5%. And take a look at the open interest build up. That one swelled up as well. Heavy shorting being seen on that counter. Tata Steel as well joined the pack. Big shorting being seen on that counter as well. But the reason that the Nifty wasn't able to get up and going is because ITC did see some shorting interest in today's session. The big heavyweight, in fact, was getting sold into in today's trade itself. Other stocks that were in focus, we did see some buying on the likes of Hindustan Unilever, even after such a big run. Big buying being seen on that counter, while BHEL as well did see some buying. Remember, United UPL, in fact, was higher in yesterday's session, but in today's trade as well, that stock ended higher and big jump up in open interest. While a couple of stocks came in for short covering bounce, the likes of Mindtree as well as Bata, both of them did come in for a short covering bounce.
All right, Nigel, thanks for that. Well, on to the earnings corner. From the financial space, Yes Bank, Bajaj Finance and LIC Housing Finance were those companies that declared their numbers today. So let's go across to Ekta for a quick wrap on that. Ekta.
Well, I'll start with Yes Bank. That was a mixed set of numbers. For example, the NII in profit was higher than estimates. The NII grew close to 37% versus estimates of 33% growth. The profit was up 30% versus an estimated 24% growth. Now, the profit was led higher by the other income, which spiked 38%, and operating profit, which was up 40% for the quarter. But the asset quality saw a dent. Gross NPA up 25% sequentially on an absolute basis, and the total restructured book rose to 171 crores odd versus 116 crores in the previous quarter, but the net interest margins were maintained at 3.2%. Bajaj Finance, very strong set of numbers, strongest quarter reported for the company this fiscal. NII and profit growth of over 30-odd%. The NII growth was stronger than we've seen in the previous quarters of this fiscal itself. For example, in Q1 FY15 and Q2, the NII growth was up 24 and 20% respectively. Asset quality maintained, gross NPL at 1.5 versus 1.4% sequentially. Management said they could hold the momentum seen in this quarter going into the next year as well. LIC Housing Finance, stable set of numbers. NII in line, profit higher than estimates. The profit, however, was impacted due to the deferred tax liability provision, DTL of 34 crores versus nil year-on-year. The gross NPA, however, improved. Gross NPA ratio at 0.57% versus 0.63% sequentially, and the net interest margins were stable Q-on-Q at 2.2%.
Well, thanks for that, Ekta. Let's also listen to the managements of Yes Bank and Bajaj Finance on their numbers.
The bank has added much less new NPAs in the current quarter as compared to the previous quarter. So the increase actually is just very nominal. I mean, 38 basis points of gross NPAs has moved to 40 basis points of gross NPAs. So it's just a very routine process. Our fresh additions to NPAs have been little less than 70 crores, 70. We believe that economic growth will be in the mid 6 percentage points as soon as fiscal 15-16. That is pointing to the prospects of recovery increasing. So while NPAs will be on an incline, but you will certainly see that the pressure on NPAs is no longer as pronounced.
There's been no margin pressure in the current quarter, and the mix change hasn't really changed the margins in a reasonable manner. Quarter 3 has been very, very strong. Full year has been, first 9 months have been very strong. And as the external environment improves, we could probably hold the momentum into the next year as well.
All right, so those are some financial companies that announced their numbers. But apart from financials, we also had companies like Kajaria Ceramics and NIT Tech declare their numbers. Pragya is here to give us the details on that. Pragya.
Well, Kajaria came out with a good set of numbers this time. It was a very impressive 30% growth on the overall sales of the company. Of course, it's on the back of a pretty low base of last year where we had that Morbi adjustment. But all of that translating into an absolute EBITDA growth of 30% coming in at 85 odd crores. What is good is that the company has managed to maintain its margins pretty stable at 15.4%. The only star point being of the analyst community that the gross margin expansion that we saw this quarter has not trickled down to the bottom line and the margins of the company. The margins have possibly improved because of the fact that the company is consistently working on improving its overall product mix. All of that translating into fairly healthy profit growth this time. Bulk of the growth that we saw in the results this time have come in from the volume growth, which came in at pretty healthy 24-odd%. And despite the fact that the company has managed to achieve that 20% revenue growth up until the 9 months, they still did not revise their guidance upwards, so maintain their guidance at 20% for this fiscal. On the other hand, NIT was a pretty stable quarter. In fact, this time the company has seen a fair bit of a pickup compared to the previous quarters. Rupee revenue growing by a very muted 1.1-odd% at 595 crores. What is heartening is that there's been a 50 basis points improvement in the overall margins coming in at 14.5-odd%, translating into a 20% growth in the profits of the company. The other good thing in the results was the constant currency growth. The constant currency revenue growth at 1% was actually a slight bit of a pickup compared to something that we've seen in the previous quarters. Listen into the managements of both of those companies, not just outlining the numbers, but also laying out, how the balance FY15 looks like.
This quarter has been aberration for two reasons. One, last year at this time, if you recall, the Morbi was a strike for 1 month. So if you actually see the volume, the total sales growth has been 30%, out of which I will take out 5% and say 25% is the actual sales growth. And if you see the quarter ahead, we have assured you that we will grow at 20% plus for the year. I think we are maintaining that, and in all probability, we should grow at 20% plus for the year.
Net profits increased 20%, in fact 20.2% sequentially. This is of course on account of improvement in operating profits, because that flows all the way down. But also we have had the benefit of better other income and reduced depreciation during the quarter, which has contributed to this very significant improvement in net profits. So all in all, I think healthy growth in sequentially, both in terms of revenues as well as profits.
All right. On that note, let's take a break. But coming up, Sudarshan Sukani will join in for a technical chat. We will also get you a lot of trading ideas.
CNBC TV 18, celebrating 15 years of leadership.